Hello and welcome to this Field Seymour Parks webinar. My name is Ian McRae and I head up the employment law team here. And what we're doing today is we are taking you through the key developments and things you need to know for 2018. And this is the fourth part of a four-part series. And in this part we're going to be looking at monitoring your employees, tax on termination payments and how that's changing slightly, and a few other miscellaneous changes you just need to be aware of. So we will start off with that monitoring piece, and basically whether or not monitoring your employees infringes the European Convention of Human Rights. And there were two cases last year, very interesting and give some useful guidance for employers here. The first one is the Barbulescu and Romania case. And in very brief terms, the facts of this were that an employee was asked to set up a Yahoo Messenger account for work purposes. The employer had in place some policies which said you shall not use our messaging systems for personal use. And then this employee was subsequently presented with a transcript of personal messages he'd sent via this Yahoo account, some of which were quite sensitive about his sex and health life. And he was dismissed for breach of the internal rules. Now, in that case, it went through the Romanian courts, it went up to the European Court of Human Rights, and ultimately we have a Grand Chamber decision here, which is quite unusual. It's basically the next level of appeal. Now, the second case, again, is this idea that monitoring can infringe employees, basically human rights. And this concerned surveillance cameras, CCTV cameras in lecture theatres, essentially, and whether installing those infringed those lecturers' Article 8 rights, their right to a private life. And that despite the fact that these were public lecture theatres, whether or not there could still be an infringement. And in both these cases, it was decided that there was an infringement of these individuals' Article 8 right to a private life. What I want to do now is take a look at some of the points to notes from those cases. So what can you and can't you do? Well, the first thing to be aware of is that this idea of a private life is interpreted very broadly and can include activities undertaken in public. So for example, the lectures that were delivered by the professors and were filmed on CCTV, that could still be an infringement of their private life, because they may be building relationships there with other lecturers or with the students. And generally speaking, the courts consider that workplace surveillance does amount to a considerable intrusion in private lives. And therefore, what this ultimately means is that whilst you can monitor your employees, you have to be very careful in how you do so. And in short, you need to give quite detailed information to your employees to ensure that you are monitoring them lawfully. So you need to tell them the extent of the monitoring that you undertake. Are you going to be looking at the content of messages, or are you just going to be looking at the flow or the quantity of messages? In what circumstances is that monitoring going to be undertaken? Is it going to be a constant monitoring of communications? Is it going to be a random selection? Or is it only going to be when there are particular circumstances in which you think it is necessary? For example, where maybe there's some sort of allegation of misconduct. It also needs to be limited and proportionate to the reason you're doing it. So a bit like general data protection, you need to have a reason for what you're doing and then only act in a manner which is consistent with that. So if you are reviewing it to check that it's not being used for personal emails, well, how much monitoring do you need to do to ensure compliance with that policy? You should only do it to the extent that's required. And then finally, you obviously need to bring that policy and that information to the attention of your employees and ensure that it's followed in practice. This very much ties in with your general data protection regulations audit, which you should be undertaking. And if you want to hear more about that, you can view part 3 of this webinar, or indeed the specific webinar that's been recorded by Field Seymour Parks on that issue. But there's a crossover of issues here. There's personal data issues, and they tie in quite nicely with monitoring, and it would be a good idea to sort them both out at the same time. So let's look at termination payments and some changes around tax there. And the main change is around this idea of payments in lieu of notice. So this is where normally an employee leaves with immediate effect, but they're given a lump sum of money in lieu of their notice period, instead of them working out their notice or being placed on garden leave. Now, the current position is that normally, if there's an express payment in lieu of notice clause in the employment contract, so a clause that says, in our discretion, we reserve the right to give you a payment in lieu of notice or similar, then normally that payment has to be taxed in the same way as if it had been worked. If there's no express clause to that effect, but the company has paid or does pay payments in lieu of notice out automatically, the revenue has come up with this idea of an auto pylon. And basically that says that if you've paid it out automatically, then that will equally be taxed despite the fact there's not a clause in the contract. So the only circumstances in which you can essentially pay a sum of money around notice tax-free is if there is a no express clause in the contract, the revenue says there isn't an auto pylon, and then you can treat it as a damages payment and potentially it's tax-free up to £30,000. Now, the revenue has said this is far too confusing and indeed probably still leaves a bit of a loophole. And so what they're going to be doing is they're going to remove the distinction between contractual and non-contractual pylons. So in essence, the idea is that anything that represents notice pay is going to be taxed going forward from April 2018. Couple of other tax changes. So from the 6th of April 2019, so not this year but the following year, employer national insurance contributions will be chargeable on termination payments over £30,000, which currently they're not. But the other ideas that the revenue came up with and which received some publicity about a sort of a variable tax threshold and removal of the current tax exemption for legal costs on termination, they're not currently being taken forward. So one other point that I should mention is gender pay reporting. Now, hopefully, if you have to do this, you are well aware of it already. But the first reports under these regulations have to be published by the 4th of April 2018. These only affect public bodies generally and large private organisations, so generally 250 or more employees. And if you fall within those categories, then you have to publish certain data about the gender pay gap between your male and female employees on a mean and median basis. You have to split your workforce up into 4 pay bands and say how many men and women are in each band. You need to give information on your gender pay bonus gap. So that's the difference between men and women's bonus payments over the previous 12 months. And then again, the proportion of men and women over that 12-month period who have actually received any form of bonus at all. Now, that is assessed on the 5th of April each year. So if on 5th of April 2017 you had that many employees, you need to get your finger out and do this very quickly if you haven't already. And equally, if you've grown in size and are now going to have 250 on the 5th of April 2018, then you're going to need to do likewise and get ready to publish this for next year. A few other miscellaneous developments to bring to your attention. 2018 was meant to be the year of grand parental leave, but it was equally meant to be subject to a consultation back in 2016, which is still yet to take place. So there's no news on this as of yet. Essentially, it was the idea that maternity leave would be able to be shared with sort of grandparents. Shared parental leave could be shared with working grandparents. But currently, there's no sign of that imminently. EU Trade Secrets Directive is likely to be passed this year. We're still waiting for guidance from the government as to how that's going to be implemented into UK law. Essentially, it tries to harmonise some of the rules around confidential information. We have to wait for further guidance on that. There is the Parental Bereavement Bill, which is a private member's bill passing through Parliament, which seems to be receiving the support of government, which is essentially saying that if you lose a child who is under the age of 18, then you'll have an entitlement to some paid leave, 2 weeks paid leave, if you've got 26 weeks service. And that will be paid at a statutory rate rather than a full rate, but that's slowly progressing through, and we wait to see when that will eventually be passed and commenced. And then finally, there is a small additional penalty if you're found to have employed an illegal worker. You can lose one of your allowances against the national insurance contributions, and again that comes into force this year. So a few final points. Usual caveat, this is all just very much a simple, brief introductory summary, and you should always take advice on your own specific circumstances. If you do want to be updated throughout the year on the developments as and when they happen, then please just email me. We'll be happy to add you to our free email employment law updates. Also, please do get in touch with any questions or feedback that you might have. My contact details are there. And if you haven't already seen them, please do check out the other 3 parts of this webinar series on the key developments for 2018.